We spend our lives preparing for our next vacation, family vacation, or yacht purchase. To be able to carry out our plans, we need goals, information, organization, and compromise. Successful plans will also necessitate extensive financial planning. Hey folks, welcome back to the channel. In today's video, we will be showing you Boss Mode Finance Guide to Financial Planning. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video, promise. Without further ado, let's dive in. What exactly is a financial plan? A financial plan appears to be precisely what it says it is, a plan for your personal finances. However, a closer examination reveals that it is more than simply a snapshot of where you are today. It is also a comprehensive game plan for reaching future goals in all aspects of your financial life. Your financial plan is similar to a detailed financial roadmap. It assists you in navigating, bending, branched, and diversion roads. These are the critical financial decisions you must make. Your roadmap will redirect you to the main road if there are any substantial detours when things don't go as planned. Finally, your roadmap keeps you on track and moving forward toward your goal. A financial plan most importantly considers both the present and the future. Your plan provides a snapshot of your current financial situation, as well as your future financial goals and how you want to spend your retirement years. It will assist you in strategizing and navigating your financial decisions by demonstrating the procedures necessary to close the gap between your present and future financial situations. Your plan will assist you in making crucial financial decisions that will keep you on track and moving toward your financial objectives. Finally, your financial plan should include all of your primary financial concerns. It takes into account your household's earnings and savings. It considers your debts and liabilities. In order to determine how borrowing affects your future success, it considers your insurance and risk management to determine how and where insurance may be used most effectively. It will even examine your estate to ensure that you are properly prepared and that your family is safe. This is why having a solid financial plan is so important for your long-term financial success. What elements make up a financial plan? Your financial plan should give you an overview of data so you can track your progress and figure out what you need to do next to keep moving forward. It should also include a comprehensive breakdown of the primary components. As previously said, your financial plan encompasses all of the important aspects of your financial life. Despite popular belief, this encompasses far more than just budgeting and investing strategies. Savings and income, assets and liabilities, risk management, and retirement outlook are the four pillars of your financial strategy. Savings and income. The first part of your financial plan is your savings and income, which is what most individuals think out first. The amount of gross income your household is expected to earn. This figure is usually determined on an annual basis and takes into account factors like your normal wage, side hustles, and investments. This section of your plan might also show how you compare to the average household income for your age group. This can be a useful metric for determining what you should strive for. Your emergency fund calculation will show how many liquid assets you presently have, as well as the amount of emergency savings you should aim for. You should also aim to save money for a 6-month emergency fund. The calculation is straightforward. Take your gross monthly income, deduct projected taxes, usually about 30% for most households, and then round that number for ease of calculation. You'll know how much a month's worth of emergency savings is from there. Calculate how much you'll need to defend yourself for 3 to 6 months by multiplying that number by 3 or 6. Assets and liabilities. Your assets and liabilities are the second part of your financial strategy. There are critical performance metrics to track in this case. Net worth. This portion of your strategy should determine your current estimated net worth and include target net worth goals for your age. Subtracting your liabilities from your total assets is a straightforward computation. Your projected net worth is the amount left over. Debt to income ratio. The percentage of your monthly gross income that goes toward paying debts is known as your debt to income ratio (DTI). The lower this number is, the lesser your risk to banks and other lenders are. Your strategy will determine your current DTI and show you where you need to improve. You can start saving more when your DTI increases. Housing. This key performance indicator will look at how your net worth, monthly spending, and financial strategy are affected by housing. It is accomplished by determining if you are currently servicing a mortgage, paying rent, or have a mortgage that has been paid off. For each of these scenarios, the calculations and analysis are different, but the ultimate result is the same. Assessing the impact of housing on your finances and recommending how much you can afford to pay for housing. Risk management. The third pillar of your financial plan examines your total risk management strategy. This is perhaps the most underappreciated pillar, yet it is crucial in achieving positive outcomes and avoiding negative ones. Life insurance coverage. Your life insurance coverage data will show you how much coverage you have now, how much coverage you need, and how much coverage gap you have. This computation is based on a number of factors, including dependent coverage and existing debt coverage. It's also crucial to consider your spouse's life insurance coverage, which a decent plan will contain. Estate plan. Your estate plan is one of those topics that is unpleasant to discuss, but the sooner you begin, the better off you and your family will be. Retirement outlook. The final part of your financial strategy is to calculate your retirement, which comprises goals and projections. Current trajectory. Your present trajectory will show you whether you're on pace to retire by your chosen retirement age or even whether you're on track to retire sooner. This is calculated and presented by using your retirement income replacement as a single number indicator of how much money you'll need to live on in retirement. Your financial goals. This is where you'll figure out and set your financial and retirement objectives. This covers the age you want to retire and the type of retirement lifestyle you want, as decided by your replacement income objective. Where can you acquire a financial plan and how can you get one? This is where the majority of folks get stuck. There is a lot of confusion about how to begin a financial plan and what the best option is. Make your own financial strategy. While this isn't the most common alternative, it should be examined nonetheless. If you're getting started with your finances, we recommend avoiding this because it'll only lead to more confusion and aggravation if things don't go as planned. Many financial gurus, on the other hand, prefer to handle their own planning. They may use this as their sole source of financial guidance, or they could combine it with acquiring a second opinion. When building your own financial plan, there are many excellent personal finance books that can serve as guides and references. You can also use the financial planning pillars as a foundation for developing your financial plan. However, you should be aware that it will still take a long time and that you will need to perform multiple scenario-based calculations. Hiring a traditional financial planning professional to construct your own financial plan is the second choice. For those who can afford it, taking this method can be quite beneficial. Your financial planner will sit down with you and assess your present financial situation, chart out your goals, and devise a strategy for moving forward. Making a financial plan is only the first step. Starting is a significant accomplishment and a step on the right path, but it doesn't end there. First and foremost, you must be truthful and genuine with yourself. This means being open and honest about your financial condition. It also entails being realistic about your financial objectives and the financial future you seek. Furthermore, the information you submit must be correct, at least to the best of your knowledge. You can simply make modifications or revisions, but providing inaccurate information will almost always result in false forecasts and computations, leading to a conclusion that appears terrific but isn't feasible. Regardless of which approach you choose to use, the more specific your information is when constructing your financial plan, the more precise your financial plan will be. It won't help you if you're not honest, practical, or accurate with the information you supply. Remember, you're creating this budget for yourself. You now have a better understanding of how and why financial planning is critical to your success. Financial planning and having a financial plan must become commonplace. Everyone requires a financial plan. While starting a puzzle, playing a game, or going to new places pale in contrast to budgeting our finances, it's critical to take the same general strategy of having standards in place to boost your chances of success. Failing to plan is planning to fail, and that's something none of us can afford to do when it comes to our money and our family's future. Thanks for watching. Subscribe for more content just like this one, and share it with your friends. Also, don't forget to smash that like button, and also press the bell icon to get notified about our new videos. Until then,